Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the market. What a time to be alive. We've got SPY at all-time highs, gold at multiple year highs, Bitcoin at year highs. We've got oil bulls showing up. There's a lot of bulls out there. So SPY on the daily time frame with an all-time high. Congrats to the bulls. We knew it was the most likely situation considering the size of the bounce, considering what consolidation looked like. And back when we were in this pullback, it's certainly, if you said we were going to all-time highs in 2-3 weeks, everybody would have called you crazy. 3 weeks, here we are. So, still remains the case. Anything above the low of consolidation, 287.82, keeps the bulls in control. In my opinion, that is the level to be watching. The last couple of days, we've seen some consolidation after the bell rings, but it's healthy, just forming a higher low. So the pullback today, higher low on the hourly, and we ended right up at that high. We do have 296.44 and 296.31 as our two resistance levels. And we'll see if the bulls are able to continue this all-time high run. If we lose the higher low every hour, the hourly higher low pattern, by breaking 293.13, then the daily consolidation is underway. So again, I don't care what the headlines say. I don't care what the economy is doing. I don't care about tariffs. I don't care about trade wars. I care about the price of stocks and the price of markets. That's it. And trends. And right now, bulls are in complete control, and we're in an ideal environment for the bull miners where SPY is at blue sky breakout and gold is in a multiple year breakout, and that is an explosive combination. We'll get to that towards the end here. IWM, gap up open, still trying to make its way back. We've got resistance of 156.18, and we did break over it by 4 pennies, but not a lot of follow through. And I did make a note, people in the chat room were talking about how IWM is pretty far off still from that high of May, and that's absolutely the case. But if you look at the percentages from the December low to where we stand now, we're only about 3% behind where SPY currently stands. So percentage-wise, we're not really much of a laggard, depending on your scope. If you're looking from December, not much of a laggard. If you're looking in the last 2 months, then we are acting as a laggard to SPY and the tech sector. So we'll keep an eye on it. We are going to anticipate a weekly lower high compared to 160.111 and a continued tightening weekly range. QQQ, continuing strong for the bulls. We've got resistance up here at 191.25, 32, and 32. So 191.32 is the level. We certainly got very close today. Still maintaining the hourly uptrend. When we lose the hourly uptrend, the key support that we're looking down at is 181.94. Bulls have a lot of space to work with. They're still extremely comfortable at this point. And even when we lose the hourly uptrend, we're going to anticipate just a daily higher low. It's going to require significant bear volume if we're going to lose the daily uptrend the next time we do consolidate. We have to keep an eye on Twitter, as always, and Trump. He posted about Iran, and that really triggered the start of a pullback. The market did recover from that by the end of the day, but certainly a narrative that we need to be paying attention to, one of the many narratives that continue to pop up. XLF 27.61 is a double top, and the bulls buying the dip today, so that's a good sign. Anticipating weakness in the financial sector because of the odds of a rate hike that the market is pricing in for July. Hourly time frames of potential equilibrium. If we cannot break 27.48 tomorrow morning, we'll look for a higher low compared to 27.12, and how this hourly equilibrium breaks will either dictate whether we test the double top or whether we test the key low of consolidation, 26.93. Hourly equilibrium for the financial sector on watch tomorrow. XLV continuing very strong, making its way back up to 95.92 is the next resistance level. Hourly uptrend is intact. Anything above 90.90 will keep the hourly uptrend. Or I should say we'll keep the daily uptrend strong. So we look at today's action, the hourly higher low established down at 93.14. Pretty much most markets and sectors today, their low of the day is the hourly higher low because we saw those gap up opens. XBI with the gap up open. Starting to pull back now. Hourly higher low pattern is still intact, but it's on the verge of breaking. 86.49 and 86.70. Break those two levels tomorrow, and we'll zoom out and look for a daily higher low to form but definitely a very significant turnaround from the high of the day to where we closed in the biotech sector. Volatility index saw some volatility today. Finally, after 2 weeks of nothing. So we started weak pre-market. The bulls showed up in a big way, got a nice spike. That's a significant spike. And if we look at these leveraged ETFs, TVIX from the low pre-market of 18 ran up to 20. Solid 10% plus move, but it's just temporary in my opinion. And if it's going to be anything meaningful, we can look at, let's go back to VIX here, but we can look at this zone 1640 and 1670. Look at all these resistance rejections, and people who track the VIX are going to say that's not resistance, you're using the wrong word. Just keep in mind that I am trying to convey concepts and trying to stay consistent with those concepts. So if we see a clear range where we don't get far above it, we know that that is a key range to be watching. 1640 to 1670 has been, the bulls have been unable to get above it. So we're keeping an eye on that level. If that level breaks, we'll see a shift. If it doesn't break, then we're still in consolidation and pullback mode. Gold on the daily. This is a very notable bull break. We've been talking about it for a while now in terms of waiting for this monthly pattern to break, and now we're full on into it. So the 5-minute time frame really stood out yesterday as far as the speed of these breakouts, and it's reminding me of Bitcoin, how fast Bitcoin is moving. Gold certainly accelerating the size of its daily candles. You go back, and if you look at the percentage moves that we've seen in 2019 for the bulls and what we're seeing in the past couple days, it's obviously very notable. And again, volume. Look at the volume very clearly standing out. Since this breakout started, volume has been above average after being right on average and slowly declining for months. Are we extended? Yes, but keep in mind this is a 2-year pattern that traders and analysts are acting on. So we're looking at 1400 psychological. Where do we go from here? Well, we're breaking all levels. This is the convincing action that the bulls needed to prove by taking out all of these resistance levels, which they have done. 1433 and then a lack of resistance. And the bulls can really get going over those levels, and they are certainly proving themselves so far. When we lose the 4-hour uptrend, that's when daily consolidation will be underway. Next time we consolidate, we're going to anticipate a 4-hour higher low is going to form. Who'd have thought Bitcoin and gold would be breaking out at the same time? Here we go for 14 right now while I'm speaking. But if we lose this pattern of a higher low every single 4-hour candle, we just look for a healthy 4-hour higher low to form. So we're not going to lose that 4-hour uptrend anytime soon. So we're not going to get an indication that daily consolidation is coming anytime soon. We have to lose the 4-hour uptrend to be looking for that pullback. And when we get it, we'll be looking at the daily exponential moving averages. Congrats to the bulls. Certainly required a lot of patience if you've been tracking this one for months. And now it's payday. GDX, significant move. So let's just look at the power of these leveraged ETFs, where NUGT, and we'll go less than a month worth of trading, and here we are up 85%. And that is exactly what the bulls were looking for. The monthly trend change confirmed. And actually, we want to look at GDX to not have time decay as a factor. The monthly trend change confirmed in a big way. 25.58, 25.71, and then a lack of resistance up to 31.79. Bulls in full control. Losing, I would be tracking gold for trading GDX, but losing the hourly uptrend generally would be the indication that daily consolidation is coming. And now we are in our 8th day in a row with a higher low every day. Congrats to the bulls. Don't fight this trend. Don't try and be a hero and nail the top and look at bear miners. At a bare minimum, wait for a shift in momentum to look for daily consolidation. And even then, we're just going to anticipate higher lows on all of these bull miners. So when you see a pattern that's long and drawn out, and you know that it's such a clear pattern that everybody's watching it, you usually get a lot of follow through when that break does occur. And that's exactly what we're seeing right now. Oil, breakout follow through. Daily trend has changed. This is the first clear shift in momentum that we've seen since 63.75, 79. So it's notable. The weekly time frame, we're just going to be looking for a lower high compared to 63.79. But again, this daily trend change is increasing the odds significantly that our monthly higher low has been established in this equilibrium. Most important resistance will be 66.58, and we are currently less than $10 from that resistance, and we are about $7 above support. So we need another $1.50 to get to the midway point here. Just under $60, or actually just under $59 is the midway point of these two most important levels that we're watching on this monthly time frame. And if this monthly equilibrium continues to tighten up into Q3, Q4, it's going to be a good one when it breaks for the same reasons as the gold equilibrium breaking, this one just on a shorter term time frame. Natural gas continues to dump, bears in full control. Short-term oversold bounce is underway. It's just looking for a 4-hour lower high. Exponential resistance on the 4-hour time frame is a guide rejecting the price. Change that trend on the 4-hour and we'll get a daily bounce going. But even then, we're just going to look to daily exponential resistance. I'll be interested if we drop down towards 2 psychological and get real extreme. But if that does not happen, just patiently waiting, keeping an eye out for a setup I like. But with gold and oil and all these other setups, cryptocurrency, MJ getting some bounce, I'm not interested in natural gas, as you know. But the bears are comfortable there at this point. So that's where we stand. Did gold break 1400? Yes. Congrats to the bulls. A clear psychological hurdle overcome. I'll check back in over the weekend. I'm going to do videos Saturday and Sunday. I'm going to be away tomorrow evening, so no videos tomorrow. And no video here at the end of these videos. I recorded some ducks, some baby ducks, in a pond on my property, and they came right up to me, but I can't upload it from my phone to this video. And I got frustrated enough to stop trying. So, do good things. Congrats to the bulls all over the place. Protect, walk your stop losses up on the way up. Don't fight the trend unless it's just for a quick flip and you're comfortable and experienced doing so. Otherwise, we're going with the trends. Thanks again. See you soon.